In this lecture, we're going to be talking about volume. So as we've said, the study of technical analysis is the study of charts and volume. So what is volume? Volume is going to be what you see here at the bottom. Okay, whenever you're looking at a chart, okay, you're going to be seeing this, which is the volume. Now the volume is also drawn based on the time of sales. Every time that there's a trade that happens on the time of sales that we've seen in the previous lectures, well, you see that there's a price and an amount and a time. Well, this amount is added in here. So if somebody trades 100 coins and then somebody trades another 1,000 coins and somebody trades another 200, well, if all of these happen within the same hour and you're looking at an hourly chart, then you would have 1,300 coins that were traded in that hour. So for each candle, there's going to be an associated volume bar, and this volume bar is going to be large to represent that quantity that was executed during that candle. Okay, so if there was a lot of transactions that happened in that candle, the volume bar would be higher. So in this case here, I know that a lot of transactions happened. Okay, and because of this, you're able to see how many transactions occurred, because it's very important to know if a lot of transactions occurred to decide on this price or not. For example, and this is the example I always like using, it's a real estate example. If, let's say, a house in your neighborhood costs 200,000, and then that's the average prices of houses in your neighborhood, but all of a sudden somebody buys a house for $500,000. Does that mean that this is the value of all houses in your neighborhood? No. But if all of a sudden there's 1,000 houses that sold in your neighborhood at that price, then you know that this price can reflect what people truly value houses in your neighborhood to be. It's the same thing in cryptocurrencies. If just one guy buys at a high price because maybe there was no sellers at that time and he just bought there, does that mean this is the price of the coin? No, it just means that there wasn't enough sellers at that time. But if there's a lot of sellers, but a lot of buyers come in and they all buy, so there's a lot of transactions that happen and they happen at these higher prices, then we can say, okay, well, look, everybody decided on this price because true price discovery happened through lots of transactions and we got these prices. So this is why volume is very important, because we want to make sure that it's decided by a lot of people. So for example, if we're looking at a coin here, in this case, we're looking at Ontology, I believe, yeah, and it's in a downtrend. Now, what did we say is required for a change in trends? Well, what's required is for a lot of people, or an equivalent force to come in and push it in the other direction. Okay, so for example, here, what started happening here? And sorry for my lines; they're not very straight. You see the volume is pretty low. Well, it didn't look low at the time, but there was a shift here in volume. You see here, to break this resistance, we need a lot of people to come in and buy, because to break over that point, right? And you see here, volume spiked and we're able to break through it, and volume kept going up. So something was going on. Maybe there was a news, maybe there's an event, something was happening where a lot of people became more interested and they broke this off. They broke the downtrend. And then we started going in another direction, and maybe we continue upwards, right? And this happened. This was accompanied by volume. If prices went above with no volume, I wouldn't be too confident in them, because it might just be a lack of sellers. And I don't want to buy something on a lack of sellers. I want it to be driven by buyers. Okay? Because if there's a lack of sellers and this is why prices went up, then what happens when sellers come back in? Then it's just going to go back down. I want the buyers to be, or I want the direction that I'm betting on to be supported by the people in that direction, not the lack of the people in the other direction. Okay. And this is, what you'll actually notice is a lot of times prices or a big price change is preceded by volume. So for example, if house in your neighborhood costs 200,000, well, before prices reach 500,000, what you're going to see is an increase in transactions happening. You're going to see this guy is buying a house, then this guy, then it's 201,000, 202, 205, 220, and a lot of transactions happening, and a lot of exchange, it's changing hands a lot, and then prices going up. So when you see a shift in volume like this here, where a lot of volume came in that wasn't there before, then you know something is going on. And then you might buy right away, buy at the good price, because you see this happening even before prices really move up. Okay, and this is why you always hear prices, precedes prices. And you're gonna always see the volume here on the chart. So this is the previous chart we looked at. I didn't change it yet. You're going to see the volume at the bottom. Now it's not because there's an increase in volume. For example, here we had an increase of volume that something is gonna happen. It just tells you watch out. In this case, we had a lot of traders who bought for 2 candles or sold, but nothing happened. We didn't break in either direction. So, I wouldn't do anything. So it's not like you're looking at volume and because of volume, something is gonna happen. You wanna see that something is happening accompanied with volume as well, right? So in this case, yes, we had the volume, but we had a break and we had a directional shift. That tells you something. If we just had volume here, you could say like, oh, something is going on, but let me know what it is so I decide on direction. But if you have just, here I'm looking at a 4-hour candle. If you're looking at a 4-hour, that means there was a buyer or seller that sold a lot, or there was a big trade that occurred during those candles at that time, but nothing more. There wasn't a very big shift. It was just a one-time thing. So yeah, make sure that for whatever you're trading, you're looking at volume, and with time you're also going to try and you're going to understand which type of volumes are just a big trade that occurs. You're going to see it on the order book, and that was it. Or if there's a shift, there's a lot of trades coming in, bigger and bigger trades. Sometimes you're even going to pick up on algorithmic trades where somebody's sending a 1,000 coin order every X amount of minutes or X amount of seconds, and you're going to pick up on this, and you'll see that volume is essential for big price movements or price changes. So this is going to do it for volume, and I'll see you guys in the next lecture.